Intel earnings beat estimates as foundry losses topped $2 billion. Intel delivered third-quarter results that exceeded Wall Street expectations, yet the chip giant's Q4 outlook fell short of analyst forecasts, highlighting persistent challenges in its manufacturing business as CEO Lip-Bu Tan works to execute a turnaround strategy amid heightened competition. Strong quarter masks underlying challenges. Intel reported Q3 2025 revenue of $13.7 billion, up 3% year-over-year and surpassing analyst expectations of $13.15 billion. The company posted adjusted earnings per share of $0.23, significantly beating the consensus estimate of $0.01 and marking a recovery from a $0.46 loss in the same quarter last year. The results were bolstered by a $5.4 billion gain from the sale of a majority stake in Altera, which contributed to GAAP earnings per share of $0.90. Our Q3 results reflect improved execution and steady progress against our strategic priorities, said CEO Lip-Bu Tan, emphasizing how AI demand is creating opportunities across Intel's portfolio. However, Intel's Q4 outlook disappointed investors. The company projected revenue of $12.8 to $13.8 billion, with the midpoint falling short of analyst expectations of approximately $13.4 billion. Adjusted Q4 earnings are expected at $0.08 per share, below the $0.10 consensus forecast. Foundry business continues bleeding cash. The company's foundry division remained a significant drag on performance, with operating losses continuing to mount. Intel Foundry reported an operating loss of $2.3 billion in Q3 2025 as the business struggles to attract external customers despite billions in investment. Over the past 4 quarters, Intel's foundry operations have generated nearly $18 billion in revenue, but incurred losses exceeding $13 billion, representing about 1/3 of the company's total revenue. The division faces yield challenges with its advanced 18A manufacturing process, with sources indicating current yields around 10 to 50%, well below the 70 to 80% needed for profitable production. We have not been able to secure any significant external foundry clients for any of our nodes to date, Intel disclosed in recent SEC filings, acknowledging uncertainty around obtaining notable customers for its next-generation 14A process. Government backing provides stability. Despite operational challenges, Intel has strengthened its balance sheet through strategic investments totaling $16 billion. The U.S. government converted CHIPS Act funding into a 9.9% equity stake worth $9.8 billion, while NVIDIA invested $5 billion for approximately 4% ownership, and SoftBank contributed $2 billion. These investments have helped drive Intel stock up over 80% year-to-date, though analysts remain cautious about the company's ability to justify current valuations amid ongoing foundry losses and competitive pressures from AMD and ARM-based processors.